A very good morning, ladies and gentlemen, and a warm welcome to Cafe Mutual Conference 2016. At the outset, I would like to thank Mr. Khatri for joining hands with EY as a knowledge partner. I think this brings us great opportunity for us to bring insights put forth across the wider audience. A specific thank mention to all the CEOs who unveiled this report on behalf of EY and Cafe Mutual report. I would like to take this opportunity to summarize what is in store for the readers of this version of the Cafemutual-EY report. Last few years, if you see, have seen a lot of positive sentiments in terms of confidence, positive sentiments, and more importantly, the recognition of brand India. I think we all would agree that globally brand India is much more recognized than what it used to be a few years back. And clearly the ball now is in our court in terms of how do we use this opportunity and for all sectors, and more specifically the financial service sector, to make this opportunity and leverage this opportunity to actually make it into a meaningful and substantial growth story. Just 1 second. Yeah? I need some assistance in terms of the... Yeah. All right. Right. As the title of our report, Cafemutual-EY report suggests, mutual funds ready for the next leap. It clearly suggests that mutual fund industry in India has evolved over the years, and with the exciting times ahead, and with the aspects that we have built recently, it's a clear indication that our industry is ready to take giant steps for further evolution. While this report highlights some of the Indian promising outlook, it also provides insights on current state, the trends, and some of the key growth indicators with respect to asset managers across the globe. With the asset managers across the globe with respect to specifically in the areas of the asset class mix, the product suite, the digital wave. We've been hearing a lot about digital wave and digital disruption, and the regulations. Though through these focus areas, what we have tried is we are not really comparing global markets with Indian markets, but what we are trying to say is that how the report is giving us a direction in terms of what are the key trends and what are the key avenues, opportunities, openings that we in India, from a mutual fund perspective, can leverage and make the most in terms of this growth story. In terms of how we are looking from a promising outlook perspective, we clearly are looking at a buoyant tomorrow for us, where we are saying that India is going to be the youngest country in the world by 2020, with a median age of 29. So there are several factors which promises and which suggests that we are on the path of development and path of exciting growth story in respect to the financial services and specifically mutual funds in India. Make in India, the concept which was revolutionized by our Honorable Prime Minister, is taking giant steps, is taking tiny steps, but moving towards giant steps, and we are expecting close to 100 million new jobs by 2022. With financial service industry evolving, with the job creation happening, there is a huge expectation of building close to 65 million new houses by 2022. And the next two factors are a lot more significant from a perspective of mutual funds. One is that in terms of the e-commerce market has clearly in the past year or two have seen a huge boom, or seen a huge way forward. And what we are expecting is that the market to grow from 50 billion, which was to close to 43 billion in 2019. That's a huge leap. With the job creations, with the new houses, we being the youngest population, we expecting currently at the number of 50 million, which is in 2012 with respect to middle class Indians, to increase to 475 million in 2030. And this, my friends, represent a huge opportunity for mutual funds to penetrate into the share wallet of the investors. EY did conduct, in the EY 2015 attractiveness survey, revealed that 32% ranked Indians as most attractive investment destination by globally. And you have 60% who place India in the top 3 investment destinations. There are 37% of, among the top 3 growing economies, 37% voted that India does rank among the top 3 growing economies. 35% voted that the world, in terms of the leading 3 destinations for manufacturing, and a high 21% they voted on regional and global hub for operations. So all these indicators coming in from a wider audience in India and globally suggest a great, exciting times for financial services and specifically mutual funds in India. In terms of what really drives what are the key growth drivers with respect to mutual funds in India? We look at, we have pointed down 4 key drivers. First being the strong macroeconomic fundamentals. India clearly took 60 years to reach the USD 1 trillion economy, and it clearly doubled that number just in the span of the next 7 years. And probably the expected gross per capita income national growth could propel India into an upper middle class income economy, which will create a huge opportunity for mutual funds in India, especially in the savings space and the retail space. In terms of the penetration, we talk about mutual funds growing, AUM growing, but there is one space where there's a lot of untapped potential, is the penetration within the investor wallet share. Currently, India is dominated by a lot of factors with respect to insurance, with respect to stock market, real estate, gold, and probably that's where we as an industry need to play a huge role in terms of investor awareness and tap the untapped potential to increase the share in investment wallet. Clearly, if you have to really compare what is the global share, we look at Indian share in terms of mutual funds is far lower as compared to the other countries, other developed and growing economies in the world. Government are taking initiatives from global investors. We have last couple of years have taken a lot bigger leap in terms of how we are attracting foreign direct investments. The government initiatives and its ambition is to be the top 50. Currently, India is ranked 142nd in the span of ease of doing business, but it intends to be in the top 50 in the next 3 years. In fact, government has gone one step further and has started ranking states in terms of ease of doing business, and I think that is a positive move in terms of creating investments. In the last couple of years itself, through the FDI, through the FDI inflows, we have seen a lot of job creation. It has, in the last 2 years, have risen from 116,000 to 225,000, which signifies the importance of foreign inflows and thereby creating job creation. The other and the most important aspect with respect to a key growth driver for mutual funds is the demographic spread. By 2021, 64% of Indian population is expected to be working population, which clearly creates a huge opportunity for mutual funds. not only in the saving retail space, but also in the retirement and pension product space. If you look historically, the way the AUMs have been moving since 1990s, mutual fund industry has grown its AUM base at the rate of 20% CAGR since FY03, and the rate has been consistent and has been complementing to an extent the stock markets or the capital markets in India. From a competitive landscape perspective, not much has changed for a long time, where we are seeing that the top 10 players continue to take the industry continue to dominate the industry with 79.5% share in March 2016, and while the top 5 players hold around 55.6% market share. One of the positives that we have seen in the last year or so is successful improvement in the retail space and high net individual space with respect to mutual funds. The regulators and the industry have been making efforts, have been continuously working hard to make that happen, and we clearly see the AUM, which was 43% in March 2009, has increased to 51% in March 2016. So that's probably the step in the right direction. If we are looking at the robust, while we have seen the AUM growing, it is also about, we definitely need to make sure that AUM growth is not only a relative to capital markets growth, and thereby it's important that we have a clear understanding, segregation, and a niche with respect to 3 aspects which will enhance the growth and which will take forward the growth that we've already had in the future as well. Products, digital, and regulation are the 3 key pillars, if we say, in terms of which will determine the future growth for mutual funds in India. If we take a step back and look at the global mutual fund industry, it seems to be well established, and it has a lot of influence in terms of people investing. If you look at the percentage of AUM to GDP, is far higher as compared to what it is in India. However, penetration in the Asian markets remain lower, including India, which suggests there is a high potential for growth. There is as Mr. John mentioned, that there has been an increasing demand and increasing aspect in terms of passive funds globally, and specifically in the alternative investment funds and ETFs, whereas India has combated by, or probably responded in terms of having alternate investment fund products and REITs. ETFs also is one of the stellar product for globally. India is yet to take strides in terms of getting there. Digital wave or disruption, as we call it, is one of the key contributors. It's going to be a key contributor with respect to the funds. We look at the emerging technologies like fintech, blockchain, big data, mobile, cloud computing, and social media. All of them are going to be transforming the future of asset management and rise from and specifically with respect to rise from a direct to customer relationship. The platforms, there are multiple online platforms which will enable ease of doing transactions for the customers, and robo-advisors are in line and are changing the rules of how the funds and the products will be distributed. With respect to regulation, post the global financial crisis, across the Western countries have been far more stringent, and they have created a complex regulatory environment with multitude of regulations, which has clearly increased the cost of compliance and the way it needs to be managed. US, EU, and Asia Pacific have with those regulations coming in future, we might see them being replicated in the Indian environment to have a more robust and more aligned industry. GST, which we all would have heard upon, is likely to have some impact on the mutual fund sector, and we will have those insights being given later during the day. If we now try to quickly compare the product trends between what the global markets are showing and comparing that with the Indian markets. Clearly, for the global markets, equity continued to dominate in 2016. The equity fund houses, it close to 43.6% share. However, we clearly see that the money market has been the highest, has seen the highest inflows in the US market, specifically in the year 2016. Thanks to the changes in the US policies, and thereby investors more being wanting to stay in the tax haven investment. With respect to India, as we said, we've seen a rise from 43% to 43% to 51% in the last 5 years. And more significantly, this year has seen an increase in the number of portfolios. Initially, when we used to look at the AUM growth, we used to talk about how the AUM has moved with the market. But clearly, we've seen a rise in equity portfolios in the last few years, and a lot of contribution from the retail, segment as well. With respect to the global markets, very clearly we have seen that global markets are continuing to innovate by bringing in different type of funds. You have specialty funds, international funds, there's a huge emergence of commodity mutual funds, and rise of liquid alternative mutual funds. Specialty funds is typically sector-focused funds. Not always do the sector move in line with the economy. So from a perspective of hedging, there have been a lot of investments in and a lot of growth in the sector funds. With respect to international funds, global asset managers continue to have country-specific funds oriented. China, although it saw close to 22% decline in the week of August 2015, but still very clearly the asset managers believe in that, and probably you see in the last 2 years there have been the number of funds in China is around 830 funds, which are China focused only. There is an emergence, due to the inability of the retail segment to buy specific commodity-based funds. The asset managers have included commodity funds in their repertoire, where most of the funds which are invested in the commodity space or commodity sector. There is a huge rise in passive investment with respect to liquid alternative MFs. We've clearly seen close to $750 billion being moved into the liquid alternative investment space, and out of that, around 312 million being transferred from the actual saving funds into these passive funds per se. In India, we have close to 50 new products which are lying with SEBI in terms of hybrid equity, debt, retirement, FMPs, tax-free bonds, and specialty funds. We in India also are seen to recognizing the need for diversifying the product suite and are taking steps towards that. Real estate REITs, most of Indian mentality is to invest in real estate, but in terms of lack of funds, or to say also from some perspective, the lack of the projects which are not been completed give rise to the real estate funds, the REITs, in that sense. With respect to REITs, one of the important aspects is SEBI has moved towards relaxing certain regulations, where it is allowing most of the part of the fund allocations to be allowed to be invested in the constructed properties, or in construction properties rather. And also from the perspective of how the entire pool, so the pooling of funds, SEBI is intending to relax the schemes. So that gives a quick boost or more boost in terms of the other products that are coming through. Alternative investment funds, 3 types of alternative investment funds. Category 1, dominated or incentivized by government and regulators. Category 2, which is more of private equity. And category 3, which is short-term investment. Regulator, again, is making an aspect in terms of how do we want to take it into the other piece of in terms of how we make it a long-term investment as well as far as alternative investment fund is concerned. Exchange traded funds has seen a stellar growth with respect to the market, and whereas if you compare that with India, ETFs are yet to gain popularity with the Indian investors. But as we see the market being mature, ETF will slowly show progress. If we have to look at some of the key aspects, in the last year itself, the non-gold ETF has seen doubling from 80.6 million to 160.2 million in terms of the non-gold ETF, which signifies a huge leap in terms of those product suite. Pension funds is very dominant within the global markets. We in Indian market needs to be probably are divided into 3 pillars. The pillar 1 is typically by the government. Pillar 2 is specifically for the employers who are creating it, and the third pillar, which is the self-invested pension funds. That is some area where we need to have a huge impact, and where mutual funds have a huge opportunity to create that impact in space. With respect to the digital, we all have heard about digital disruption, and digital disruption, globally the asset managers have used this digital disruption into the space to create consistency, that's standardization, create cost reductions and operating effectiveness, and also through that piece we try to maintain or create a consistent client experience with respect to product per se. All the real estate, all the global asset managers have gone into being social media savvy. We have seen that movement within India as well. The key aspect within digital distribution is how are we going to reach out to the customers in a manner which is going to be impacting a direct link to the customers, showing insights, showing benefits, and having us lead to a more sustainable investment future. There are tools like social media, big data analytics, fintech, and cloud computing. Robo-advisors are taking pace, and as we move on, we see them increasing further. With respect to India, the steps that have been taken so far is around creating efficiencies. We have got into the paperless experience of transaction processing. eKYC, an online platform for buying and selling MFs, is one leap in terms of digital transformation. Enhancing distribution reach, industry-wide digital platforms supporting mutual fund distribution in India through stock exchange platform like MF Utility, and there is a possible e-commerce platform in future which is being considered by the regulator. In terms of robo-advisors, automation is redefining many fields and offering less expensive models to reach the wider audience, and that's going to be the key in terms of how we are able to reach out to the customers in a more effective and a cost-effective manner. If you look at regulations, clearly, as we said, that regulations globally are far more stringent, and they have multitude in nature. And if we compare that to India, very recently, some of the key aspects around regulations is around the additional disclosure requirements within the offer documents, mandatory color coding system in the riskometer. So the regulations in India are moving towards making them a little more investor aware and more investor conscious. We are looking at, there is an increased focus on rationalizing the distribution commission and thereby pay some more emphasis on the advising part of it. Rationalizing the product suite by putting restrictions around the types of funds and limiting the number of under management. And there is going to be stricter investment limits for debt-oriented funds. Ease of redemption scheme is also one of the key regulation which has been coming out and going to be in favor of the investors in terms of exiting the mutual funds. So typically, if I have to kind of sum this up, through this report, we have tried to bring in global insights. At the same time, put an Indian flavor to it in terms of where we need to go, what are the opportunities lying in front of us, and how do we capture those opportunities. Thanks a lot very much. For any feedbacks with respect to these reports, we are happy to receive them and take them as they come through. Thanks once again.